Good afternoon. This is Tom Alexander. It is Saturday afternoon, October the 11th. This is the U.S. stock market update for the week beginning Monday, October 13th. And what a Friday we had. Uh, I have posted some charts actually in the report this week. And I'm not going to go through all the charts that I have posted because there are a few dozen of them. But if you will go to the website, let me show you. I'll show you that here. So if you go to the website, go to alexandertrading.com, click on weekly update, click on weekend report for Monday, and you can click on all the weekend reports going back for a couple of years, but you can click on the weekend report. And I posted all these charts, and a lot of this is interesting, relevant stuff. If have we formed a bull market top? Have we not? What do bull market tops look like? What follows bull market tops? What follows important highs? Is this different? If not, etc. So there's a lot of information here. I'm not going to go through in this video. I want to sort of try and make this video short and sweet and to the point. But if you go to the website, alexandertrading.com, as you see here, this is free. Just go to alexandertrading.com, click on weekly update, and you can get this information. Okay. Now let's go to the charts and we'll talk about what you probably care most about, which is what's going to happen next. And I'll tell you up front, I don't really know, but I we can sort of narrow down what we think is going to happen next. Now, this was in the report that I did. I did a special update that I posted, and I posted this Thursday evening. And basically what I showed Thursday evening was the fact that we were in a mature structure, a balance area from a market profile perspective, market profile slash auction market perspective. And I said, okay, this is a very mature structure, and it's very likely we're going to move very sharply out of this structure. And that's exactly what happened. I gave levels. Again, you can go back and you can look at that update. Now what's going to happen? Look at the range of this. This is Friday's range. Now this is an auction, and I go into some detail in the report, in the written report, and on the website. And again, I strongly encourage you, if you are interested in auction market price development and how that works, and or you are a quote unquote market profile trader, I think this is a really good lesson that I have posted, and it's on the website and it's in that PDF if you want to download it. But the auction process is in effect in all degrees of time, all the time. So what we have here is a distribution. We have a range that is in the process of being established. Is this range complete? We won't know until it is complete. But we do know that this market is not going to remain this vertical for much longer. It's going to become more two-sided. Even if we go a lot lower, this market is not going to go down at the same rate of change that we saw Friday's trade, not indefinitely. Now, could we be down really hard on Monday, maybe even really hard Monday and Tuesday? Possibly. I'd be surprised, quite frankly. But I would think by no later than Wednesday, you're going to see some sort of a bottom and an attempt at a rally that is likely to be face ripping back to the upside to one degree or another. Now, do I think that is the latest and greatest generational buying opportunity in this bull market? No, I don't. I think that this is more likely to be more of a process than anything that we've seen since that April low. Now, and I put this in the report also. I thought the same thing at the April low. I thought that we would have a face ripping rally, which we had, and then I thought we would test the low, which we really didn't do. We had about a 50% retracement, and then we were just relentlessly up for 30+% in the SPX index until Friday's little blip, shall we say, at least so far. But let's look at the cash indices, the charts, and see if we can identify some levels. All right, this is the RSP. I want to start with the SPX. So here is the SPX, and we closed on Friday into an area that I have had highlighted for a while. And below this area, we're in a giant elevator shaft now, but this is a logical area. I don't think this area is going to hold. I think we're going to see lower prices, even if we get a big bungee jump Monday, which would surprise me a little bit, frankly, if we don't get some follow through. Uh, this is the next level to the downside. Now, the decline off of the high so far is only 3%. It's dramatic because most of it occurred in one day, and we haven't had anything like that in quite a while. Now, what back to the upside, there are levels, and I have put those in the report as well. Actually, I'll just show you. Let me go back to the profile view here. There's a little bit of a volume node in the SPX. Now, this is the cash market, 6609 to 6625. That if we get some big bouncing Globex, it would be interesting if we trade up into this area. If we get through this area, what really should hold under the immediate bearish scenario is this 50% retracement of this range. Now, I'm not big into Fibonacci stuff. I don't think it has all that much validity. There's a 50%, there's a Fibonacci retracement every three handles, up or down, retracement, extension, whatever. So anyway, but the 50% level is a pretty good guideline when you have conviction in any time frame. Now, this is the intraday time frame. So I would be surprised if we get above a 50% retracement before we have more downside probing. Okay. So we stopped in an interesting area. Now, I'll also point out we traded more than 0.5% lower after the cash close in the futures market on Friday. Now, if that continues in the Globex into Friday morning into the cash session, we're going to have quite the gap down. Now, the next level to the downside from an auction market perspective is down here around 63.75, 63.44. I'm not suggesting we go there. I'm just suggesting from an auction market perspective, this is the next level. Everything below Friday's low into this area is basically an elevator shaft in the SPX. Okay, let's look at the NDX. Here is the NDX. Now, let's see, how much was the NDX down? So from top tick, this was a wide range outside reversal day, almost 4%. That's quite a move. It stopped at this pivot low. This is a better area from an auction market perspective. This 23,901, 23,701, and then below there, considerably lower 23,034 to 22,665. And again, these charts are all in the PDF that you can pick up on the website if you'd like to print these charts out. But again, everything got hammered on Friday. Everything. So there's not like what we've been seeing where you have this disparate activity among the indices. Okay, here's the Russell. The Russell is off 4% plus from its high. It also broke out of a balance area. I pointed this out in Thursday's update, and it was sort of a warning that, and I said this, something had to give by Friday because you had the Russell breaking down, you had the equal weight breaking down, you had the New York Composite breaking down, and then you had the NDX, the SPX blithely continuing to trade to the upside. Something had to give, and it was dramatically gave on Friday. So the Russell is right on the cusp of its immediate downside key reference area. If we look at the Dow, and again, the Dow was in a balance area on Friday, broke to the downside. The Dow is down not quite 3.5% off its print high. It's in the middle of nowhere. Its next level is 44,983, 44,785, and then here's the one below that. And then if we look at the New York Composite, it's in the middle of nowhere. It's down about 3.3% off its all-time print high. This is a better level. 2916, 2819, and then just below here. So those are your levels. And again, you can pick these up in the PDF from the website. Let's take a look now at the internals. Now, this is breadth. This is NYSE data. I keep moving averages. I keep 10 period. In this instance, this is a daily chart. So this is a 10-day moving. The red is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. And the histogram is breadth, NYSE closing net breadth. Now, breadth closed at its lowest level since May, but it was unable to close negative 2,000 or lower, which is quite remarkable considering the magnitude of the decline. Something else that I have highlighted on this chart, and I've been talking about this for months, is this rally off the April low. The velocity and the magnitude of this rally was absolutely stunningly extraordinary. We traded, let's see here, from the print low to the print high, up almost 40%. I think it's 40% plus in the NDX. And the retracements were extraordinarily shallow and extraordinarily short-lived. And I have highlighted some retracements in the rally from the August 2024 low into the February 25 top. And it was quite a rally, but you had something resembling a normal market where it would, as Don Jones referred to, run and pause. Well, this was basically rip, dip and rip until Friday. Now, I have no idea if this is the end of the bull market. Actually, my idea is that it is not the end of the bull market, even if we go considerably lower. If the bull market resumes, I think it will resemble something more like this than another leg like this. I think you will see a more two-sided move higher if and when we bottom and the bull market resumes. Now, what if we're in a bear market? Great. It's a trader's market. Bear markets are great markets to trade. They're very two-sided. The rallies are ferocious. You have great levels. And again, I will direct you, please go to the website and look at the charts of important pivot highs that have occurred since 1987. I have been trading since 1985. I have traded through all these crashes, all these important highs. All of these sharp declines have similar characteristics. They're much more similar in character than our bull trends. So if regardless of whether or not we're in a bull market or a bear market, if you are a trader, this is a gift. We're being given a gift. Now, one other thing here. Here's VIX. And VIX spiked on Friday, and it's the highest level that it's been since back here in May when it was declining, okay? Now, just for fun, this was the last April tariff tantrum. This is certainly a tariff tantrum. And that tariff tantrum lasted 15%. It only lasted a few days. It lasted basically 1, 2, 3 days from top to bottom. Now, if we were to have a decline of similar percentage magnitude, this is where it would go. And again, I'm simply posting this for perspective. It is not a prediction. A couple of takeaways from this: VIX can go a whole lot higher, and we can go a whole lot lower in a short period of time and still meet my thought that we're going to see a low, at least a short-term low by Wednesday, in some sort of an attempt at a bungee jump that's likely to be quite the face ripper. Okay, guys, thank you for watching. If you have found value in this, please subscribe. Please hit the notification bell. Please make comments. It helps with the algorithm as I try to build the channel. You guys enjoy the rest of your weekend. I'll speak with you again very soon.